All right, morning traders. Welcome back. Welcome back to Morning Cup by 8. Aiman here. Happy Friday. Okay, so looking at the S&P 500 today, well, it retraced slightly for Thursday's session, down by almost 0.3% as market cooled off after recent gains and also the valuation concerns crept in. Also, buyers are taking profit in some tech names, I believe, right? So adding in uncertainty from the ongoing U.S. government shutdown and also the uh, the move looks like a modest pullback from yesterday, right? So looking at the technical perspective, right? Um, the we do not see any attempt at this juncture. We still keep our 6,700. So towards the upside, 6,800 resistance remains intact. So I think for US market, if now, right? So investors are on some of the info on CPI rate cut. Looking at 50, well, it pulled back yesterday's session. Likely reflecting from the some cooling of the also AI rally. Okay, I think the market participants may be done the recent jumps, even the macro outlook remains uncertain at this juncture, right? Also, if you remember or if you can, right, the World Bank did China forecast. Well, in charts, futures was below this 15,500, or I would call it as a consolidation mode before it might reach even highs is 15,500 level, right? So overall, trend remains bullish, judging average line right here. So yeah, looking at the W crude oil, well, it dipped on Thursday's close after the Israel deal is political tension that has been supporting the. So while the underlying supply concerns still are the pullback looks like the pullback right now is technical adjustment. So we remain cautious on whether the deal holds, right? Or if new is up or upside. However, positive on the WTI oil price, holding a positive bias. So from here, we saw that these stop loss remain capped at $60 level, right? So coming back to Malaysia, well, for KLI, it inched up, likely supported by investors positioning ahead of today, right? And hope for some, right? Also, the saving estimate for subsidiary has is some worry. So adding in interest in these, in the blue chip names, gave the market some lift. clarity from the real catalyst, and also if you look at it, it rebounded yes on yesterday's session and potentially lifting higher in the coming session. So remains at 1675 points, and also with support is 1570. So we do not see any I would say negative sentiment intensifies at this juncture. So in terms of yesterday, the in terms of sectorial wise, we saw that healthcare for the first time to be the followed by the tech sector, adding in by almost 5.9% and 2.9% respectively. So this was lifted. For healthcare, this was lifted by the glove stocks after Top Glove released their quarterly results, right? Yeah. Oh, and later, I think Eddy will share with you on the Top Glove results note, right? So yeah, we added HS plan for today to our watch list, and since some of you are looking at the tech stock, we also have DNO, Tech, and also yeah, we can take a look at upside as well. That might have potential upside. Okay, so to ride on the healthcare sector bump up, right? So we think that the KPJ is also one of the best stock to look at in the healthcare universe. So we published a technical report previously, and from yesterday's move, we saw that the stock is now testing our level at 2 ringgit and 86 cent. Well, if the sentiment within the sector, yeah, I mean the if the sentiment is within the sector flowing through, right? I think 3 ringgit resistance level is possible. Right. So looking at our trading stocks, Malaysia trading stocks for today, we have Dialog. So the stock is in its pending breakout formation at 2 ringgit. So with that, we expect that the momentum to remain steady and the stock able to come higher to test the next resistance at 2 ringgit and 10 cent, followed by 2 ringgit and 20 cent level. So if the stock to clear or to reverse below 1 ringgit and 90 cent support, this signal a further pullback. And also next we have HS Pen or Hub Plantation. So yeah, the stock on yesterday has experienced a breakout where it breached the resistance of 2 and 8 cent on a high volume. Right. So if the bullish momentum persists and continue to trend higher at upcoming session ahead, right, the counter might be climbing towards 2 ringgit and 20 cent, followed by 2 ringgit and 30 cent. Right. So do watch out for the 2 ringgit level support for any attempt of reversal. Right. So looking at the FCPO, so it climbed modestly on yesterday's close. So the move is likely backed by concern over supply pressure. Also, the plantation sector just got I think an upgrade with higher CPO price assumptions, right? So support from the crude oil and also expectation around the biodiesel demand are adding to the momentum as well. Yeah, so that said, yesterday's move is positive, and we still have a stop loss at 4,600. So until it closes above this 4,600 level, we shift to a bullish bias in our report. Okay. Right. So lastly, right. So since we touch on the FCPO, so why not we recap on our previous stock pick, which is also plantation related counters. So yeah, if you see here, the stock has gained by almost by 2%, 2.1%, right, on yesterday's session. So true enough that it bridged above our resistance at 3.35 after the round, I would say the round rebound, right? So by judging at this structure, we believe that the bulls have the technical advantage for now. Right, so yeah, I think that's all I have for today. Pass the floor to the next speaker, Leng. Thanks everyone and happy trading.
Thanks, Aiman. So today we've just got a report, a thematic on food security. So this is just talking a little bit about Malaysia's food security and also following an event that we had, a conference that we had on food security recently. So basically, I'll just summarize, some of the points, the key points that we talked about during the conference. Obviously, global food security is, vitally important in the light of 7 mega trends that we are seeing right now in the world, which is rising and aging population, urbanization, climate change, resource scarcity, geopolitical tensions, globalized diets, and food inefficiencies. And Malaysia, obviously, we are actually currently facing a dual reality whereby we are seeing some resilience in growth with the sector still growing at a 5.1% year on year. But at the same time, we are a net food importer, where we saw in 2024 our imports of agro-food actually rose by 14% versus exports only an increase of 11.5%. So the main imports are coming from rice and wheat, and also as well as inputs like seeds, fertilizer, and even machineries. So with this, the dependency that we have, it does expose us to global inflation and supply shocks. And this was definitely evident during the 2007-2008 GFC, where we saw, future speculations resulting in spiked rice prices. And again, in 2023, when India's rice export ban disrupted supplies. More critically, what we have seen also is that Malaysia now has a industrial crop-centric model, which has led to 73% of arable land being used for palm oil. But yet, if you look at food crops, they only occupy about 10% of arable land, but they do generate comparable value added per hectare of 42% versus 44% for palm oil. So what we do see is that the sector is vulnerable, and this is further compounded by slow technology adoption, low labor productivity, and underinvestment. Specifically for cocoa, we have also seen that despite the fact that there has been a solid growth in processing facilities, Asia's cocoa production has actually plummeted by 60% over the last 10 years from 2012 to 2022. And production only comprises about 5% of the world's crops today. And this is largely attributable to Indonesia, which has seen its output, halved because of aging plantations, as well as competition from higher yielding crops like palm oil. So if you look at Asia-based processors for cocoa, they are also highly import dependent, primarily sourcing from West Africa and increasingly from Ecuador, which has seen a 23% CAGR in bean exports to Asia in this last 10 years as well. So what we do see going forward is that in order to secure sustainable growth for cocoa as well as other agro-foods in Malaysia, there is a need to shift towards diversification via intercropping and agroforestry, which will enable, the farmers to generate additional income streams, and therefore attract some of the younger farmers to come into the industry, and also resolve the fact that we have this current aging farmer crisis. Of course, we do need also that government's collaboration with other ASEAN countries, to provide some targeted subsidies and to develop adequate infrastructure to assist the smallholders to plant and effectively, efficiently monetize their crops. Equally important is ensuring that fair pricing is there in order to ensure that there is enough income for the farmers, and also to strengthen household food security. So overall, we think that there are a few stocks within our coverage universe that would actually benefit from these changes that we're expecting to see going forward and that the government is focusing on. And these would be the stocks that are currently operating in the agri-food sector, providing agri-food products not just for Malaysia, but globally. And this would include Farm Price, Guangzhong, IOI Corp, Leong Hak, and SDK3. These are just a few of the buy stocks. So that's all from me. Let me pass you on to Eddy. Thank you very much.
Hi, good morning, everyone. This is Top Glove results review. We are upgrading Top Glove to to a neutral from sell with a higher DCF based target price of 61 cents, up from 54 cents previously. Our new target price still implies a 9% downside, but we are having a neutral call, and we believe that valuations are now fair following our earnings reassessment. A little bit on FY25 results. It came in ahead of our expectations, though below consensus. The company reported core PATAMI of 24.9 million in fourth quarter of FY25, and this brings the full year earnings to 24.1 million versus our forecast of just 2.6 million and consensus 59 million. So the key deviation here is, against our numbers was mainly due to lower operating expenses and higher plant utilization. So they are also reinstating their dividend payout, declaring a final dividend of 0.48 cents per share, representing 35% payout ratio. In terms of operations, the growth was largely driven by latex. So blended ASP fell to $18 per 1,000 pieces, mainly due to a steeper drop in latex glove prices, which is down 9% Q on Q, while nitrile glove prices were relatively stable, down slightly at 1%. Top Glove deliberately cut latex glove ASP to stay competitive in the non-US market, taking advantage of lower latex concentrate prices, which were down 14% Q on Q. This strategy worked. We see that latex glove sales volume actually rose 25%, while nitrile glove grew 9%. Lifting overall sales volume by 18%, with plant utilization for the quarter now at 71%. So in the results briefing, management highlighted that Top Glove cost structure has actually improved significantly. Production cost and pricing is now nearly on par with Chinese peers, whereas previously they were at about $1 to $3 higher. They also don't see Chinese expansion outside of China as a major threat, given the 10% higher cost base of overseas Chinese operations. With stronger sales momentum, utilization rate has continued to rise to about 75% in recent months, and management is looking to reactivate 2 billion pieces of idle pieces by the first half of FY26. So, and in terms of raw materials and gas prices, they are expected to remain stable in the near term. Post results here, we have raised our FY26 to 27 earnings forecast to 160 million and 192 million respectively, from 32 million and 70 million earlier, mainly on higher utilization assumptions of 75% and 78%. We also introduced the FY28 earnings of 215 million. So after incorporating these revisions, our target price actually moved up to 61 cents, which includes a 2% ESG premium. While we continue to expect industry headwinds and intense competition to persist in 2026, we acknowledge that Top Glove improving cost base, operating leverage would support its gradual earnings recovery. Key risks here to monitor includes USD MYR volatility as well as ASP movement, utilization rate, and the raw material costs. So in short, we are upgrading the stock to a neutral. We think that recovery is underway and valuations are fair. Whether or not the Top Glove number would be representative of the whole industry, not sure for now, because Top Glove, they do have a higher percentage of volume coming from latex. Hata and Riverstone is mainly nitrile focused. Kosan do have latex gloves, but we do have a buy on Kosan as well. Yeah, that's all from me. Pass on to the next presenter, Vanessa. Thank you.
Thank you so much, Eddy. Morning, everyone. This is Vanessa from the Warrants team. So I will just share what actually happened yesterday. So yesterday we actually see some of the warrants are highly traded. Okay, if you see that actually Hata C3D, which is actually relevant to what Eddy has shared earlier on, Hata C3D actually gained about 75% from the day before. All right, so if you notice on the price change over here, for all data on Warrants website, right, it's actually based on yesterday's closing price. Okay, so it actually changed from 4 cents to 7 cents, so it actually recorded a price change of 75%. All right, so besides from Hata, EGCF has also been a very popular warrants among the investors. All right, so these are actually those who are actually bullish on EG industry. So besides from EGCF, EGCG are also is also one of our RHB issued warrants. All right, but yesterday actually it actually dropped a bit for about 7%. All right, if you notice that the sensitivity is at 1.5 ticks only, so it's super sensitive. All right. On the other hand, Malakoff C65, JPGCI, Nagash Speedmart C15 and Gamuda C4A, they are also highly traded yesterday. All right, so actually I put on this schedule for you to have a look, is that you can actually compare. You can actually see that some of the warrants with lesser ticks of sensitivity, which means it's more sensitive, and a decent rate of effective gearing, about 3 to 5 times, all right, will actually garnered some interest from the public and also some bullish investors. All right, but one thing to an additional points for you, trader volume doesn't mean that it's net sold, so it's not net selling from RHB to the investors. It could be just trading, buy and sell, or also like sometimes when JPGCI recorded very high price change, like maybe they bought it like a few days ago, and then these are actually the volume they actually sold. All right, so you cannot actually tell whether they are buying or selling, but it will be best if you have a bullish view, then you just buy. You don't have to ask, don't have to like know whether they are selling or buying. All right. So how to choose a warrant? Like first, you have to identify a breakout price. Of course, every day, RHB Morning Kappa at 8 will be Aiman and Joseph. They will be providing you some of the ideas on the stock on the stock picks. All right, and also breakout prices. All right, so it will be good for you to actually refer on that. All right, and the second thing you need to do is that you have to choose a good warrant. So when the how do you mean what do you mean a good warrant? Of course, it's with good sensitivity that you are comfortable with, whether it's about 3 ticks, 4 ticks. So besides from that, it will give you a decent effective gearing. All right, so we actually see effective gearing directly from the absolute price. If the absolute price is slightly higher, then you know that the gearing effect will not be that as good as those cheaper. All right, but when it's very cheap, then you have to see whether it's about the money or it's like very hard for you to to see the change because the sensitivity is not so good. All right, and then what makes everything easier is that you can actually use the price matrix. All right, it will be available on the RHB World website. Okay, so some of the warrant in focus, these are the names that, since today is a highly anticipated budget 2026, right? So these are the warrants in focus. Actually, all these counters are actually handpicked by the RHB research team. For example, Gamuda, KPJ, Signprop, SolarVest, and Tenaga. All right. Of course, we actually noticed some of the counters has already been, moving before budget at all because of the bullish view on from the investors, from the public. All right. So these are so they have actually handpicked the counters, right? So I handpicked the warrants for you. Okay, so Gamuda C4A is actually very new, so you can have a look on Gamuda C4A. Secondly would be KPJ C27. All right, so KPJ C27, actually I was spend more time on that because today Aiman, he actually mentioned on KPJ. All right, so KPJ is actually eyeing a breakout 2 ringgit 86, 2 ringgit 86 cents. Okay, so how do we actually look at it? I'll share with you later. So next will be Signprop C52. You can actually screenshot on this so you can have a look later on Tenaga. So Tenaga, there's two Tenaga warrants, Tenaga C3K and Tenaga C3I. Okay, so Tenaga C3K, honestly, I actually see more volumes traded on C3K compared to C3I, but because they have different specifications, so that would be I would say that would be up to you, right? It's your preference. So see whether you want it to be more sensitive or less sensitive. Okay, so I'll share with you on the warrants screen. Okay, let me see. What am I sharing? Okay, wait. Okay, so I need to look at the RHB warrant website. Let me see. Where is it? Okay. This is the warrant website, so KPJ. So KPJ, if you search on the warrant details, KPJ C27, you can actually see this price matrix. Okay, so this price matrix will tell you how much is the warrant cost when your mother share is priced at, like, for example, 2 ringgit and 85 cents. And then it will be about 14.5 cents, right? 14 cents and half, sorry. And then if it actually broke out and then it hits about 2 ringgit and 90 cents, example, and then the warrant price will be 15.5. So the differences in the warrant price will be your gains, or if it drops, then it will be your losses lah. All right, so for KPJ C27, the sensitivity is like quite good at 2 ticks only, while the effective gearing is 4.6 times. You can actually see it from the absolute price of KPJ C27, so it's not very expensive. Sometimes you will see warrant with 20 cents, 30 cents, 40 cents, or even 50 cents, like for example, SolarVest. Then you know that there's actually no point for you to put your money in warrants because the gearing effect is so little. Might as well you can just go for, might as well just go for Malaysia SolarVest. All right. So besides from that, maybe I can share with you on Tenaga as well. So search on Tenaga C3I and C3K. I hope you can see. So 5.9 and 6.6 ticks. So the sensitivity is about the same, but the bid price is different. Means that the BNRs means that the absolute price is different. One is 5 cents, one is 7 cents. So it's up to you. You want it to be like super high, like more higher in effective gearing, you can actually get more higher percentage than C3I. If you are quite a decent player, you are more conservative, you can go for C3K because the expiry date will be about the same. Okay, so this is about Tenaga. And also last but not least, maybe I'll just share with you on SolarVest, because SolarVest, I think the past 1 month we have seen a very high traded volume in SolarVest warrants, not only RHB but among all our peers. So you will see SolarVest and SolarVest warrants. There's so many people trading SolarVest. Okay, so we have 3 CM, CN, and CU from RHB. Okay, but looking at it, the only tradable I would say is SolarVest CU, because if you compare CM, Malaysia, and CN, New Zealand, the warrant price is about 53 cents and 26 cents. So it's very, very expensive. That is due to these warrants are super deep in the money. It's like highly deep in the money. When the exercise price is like 1 ringgit and 45 cents, but currently the share price is like near to 3 ringgit. So then that will be a lot of intrinsic value, and that cause your warrant price to be very expensive. Okay, so CU will be more tradable for you if you are still bullish on SolarVest. All right, so high mobility, I think I actually saw it from Aiman's screen just now. All right, so it's actually one of the focus stocks by RHB research team. All right, so high mobility, high CD, these few days also see very high traded volume now. Okay, so it's actually quite popular among high call warrants. So high CD is giving an effective gearing of about 3 times and sensitivity of about 2 ticks. So it's like, oh, I cannot picture what is this about, right? Just click onto high CD, then you will actually picture it from this price matrix. Then you know that yes, there were ones, right, 2 days ago, like on the 7th. All right, so you can tell it's actually from 7 October from 10 cents to 8 October recorded 16 cents. So it's 60% in 1 day. All right, so this is from day 7th to 8th. But warrants, because it's actually a derivative and it moves very fast, right? will actually follow the changes of the share price. So during the day, you will actually see the price move up and down. So this is just telling you the closing price, but during the day it will be very interesting for you if you are following on the share price movement and also the warrant movement. Yeah, so it will, if you have not started to trade call warrants or put warrants, then maybe you can actually start doing it now, as the market is considered quite bullish for now. All right, so you will actually see it more interesting, and then hopefully it can actually be part of your portfolio as well. All right, so with this, I'll end the session, and thank you so much for dialing in RHB Morning Cup at 8. So we will see you on Monday at the same time. Happy trading and happy weekend. Thank you.